8 investment myths that will keep you po. In the realm of investing, a multitude of myths act as stumbling blocks on the path to wealth creation. Regrettably, those who remain ensnared by these fallacies squander invaluable time that could otherwise be wielded by ordinary individuals to amass riches. This irreplaceable resource slips through their fingers. Through the medium of this video, our aim is to cast a spotlight upon these misconceptions, delicately unveil their layers, and expose the true mechanics at play. Thus, we invite you to recline and attentively absorb these prevalent investment myths, for within this narrative lies a depth far beyond initial perceptions. Number 1. Investing is exclusively for the wealthy. The pervasive misconception that investing is a realm solely for the affluent dissuades many early-stage financial adventurers from embracing the boundless potential that investing offers. The truth, however, paints a different picture. Today, investing has shed its former exclusivity and morphed into an accessible landscape. Online brokerage platforms, the eradication of commissions and fees, and the innovative concept of fractional investing have all played a part in this transformation. The once imposing barrier that separated the wealthy from the investment world has crumbled. Now, individuals with modest incomes can initiate their journey by starting small, gradually nurturing their portfolios over time. Those who subscribe to the notion that investing is reserved only for the rich fail to grasp the genesis of wealth itself. The affluent likely accrued their riches through astute investments, whether in businesses, real estate, stocks, or alternative vehicles. The ascent of retirement accounts, mutual funds, exchange-traded funds, electronic trading, and the abandonment of fixed minimum commissions has collectively paved the way for a more approachable investing arena. This democratization of investing has extended the privileges once held exclusively by the elite to nearly everyone, ushering in a new era of financial inclusivity. Number 2. Investing with gambling. The prevalent misbelief that investing is akin to gambling fails to acknowledge the stark distinctions that set these two endeavors apart. It is imperative to grasp that investing and gambling are separate practices, each governed by distinct principles and yielding different outcomes. Investments are rooted in a meticulous assessment of risk and reward. This process involves channeling funds into entities that boast a proven history of success, underpinned by fundamentals that pave the way for future profitability. In stark contrast, gambling predominantly hinges on chance and unpredictability. While the outcomes of gambling are contingent on luck, investments find their driving force in a blend of factors, encompassing the values of underlying assets, the dynamics of the market, and the influence of macroeconomic forces. Armed with an understanding of these disparities, individuals possess the capacity to craft judicious decisions regarding the allocation of their financial resources, cultivating a substantial probability of success over an extended time frame, rather than relying on mere fleeting occurrences. Number 3. Age hinders investment. The fallacy that youth precludes investment is a misguided notion that can obstruct the financial progress of young individuals. In reality, commencing an investment journey at a tender age holds immense potential. Within the realm of the stock market, time emerges as the quintessential variable. The earlier one embarks on this path, the greater the temporal advantage. Lengthy investment periods yield amplified benefits. The phenomenon of compounding emerges as a steadfast life for those who initiate their journey early, causing even modest contributions to burgeon significantly over time. By embarking on this voyage during their formative years, youthful investors acquire the resilience to navigate market oscillations, internalize invaluable lessons, and incrementally accumulate wealth. Additionally, early engagement in investments imparts financial acumen, nurtures discipline, and fosters a far-reaching outlook. By discarding the notion of age as a hindrance, young individuals unveil a vista of enduring financial stability and progression. This pursuit transcends the realm of stock market investments, extending its grasp to encompass personal development, education, career advancement, and even property ownership. Number 4. Age constrains investment. The yearning to have initiated the investment journey earlier is a sentiment echoed by investors across the spectrum, regardless of their entry point. The notion that age curtails the potential for investment is a fallacy that dismisses the enduring capacity for financial expansion. While time undoubtedly stands as the investor's closest ally, reaping the benefits of investment remains attainable at any life stage. Admittedly, the strategy employed may diverge from that of a younger counterpart, yet advantageous outcomes can still materialize pre- and post-retirement. Age, far from discouraging investment, imparts distinct advantages. Older individuals often wield a treasure trove of life experiences, financial acumen, and a patient outlook, qualities that distinguish them from their youthful counterparts. Engaging in investment during the retirement phase serves to safeguard and even augment one's wealth, thereby guaranteeing a retirement characterized by comfort and the bequest of a lasting legacy to successive generations. In keeping with the adage, the best time to plant a tree was 20 years ago. The second best time is now. The opportune moment to embark on an investment journey transcends temporal boundaries. Number 5. Requiring expertise for investment. Demolishing the misconception that only financial virtuosos can venture into the realm of investment serves to level the playing field. While possessing an in-depth comprehension of the stock market and various investment avenues can indeed prove advantageous, it is by no means a prerequisite. In the contemporary landscape, initiation and cultivation of a profitable portfolio are accessible to all, regardless of their status as novices. The essentials to embark upon this journey and usher forth transformative returns are refreshingly uncomplicated. Firstly, a fundamental grasp of where and how to initiate an investment account is indispensable. Subsequently, a familiarity with judicious investment choices, expected outcomes in terms of gains, risks, and the potential for loss, steers the course. Novices often grapple with intimidation when confronting the intricate terrain of investment, leading to an initial sense of being overwhelmed. However, it is vital to recognize that the architects of many multi-million-dollar portfolios are not necessarily experts. Rather, they identified strategies that resonated and persisted with them. Hence, the venerated notion of expertise as a prerequisite is discarded, paving the way for all individuals to chart their investment trajectory and manifest substantial growth. Number 6. Debt-free prerequisite for investment. The fallacy dictating that complete freedom from debt is a prerequisite for delving into the realm of investment remains a misguiding force that curtails the wealth-building prospects of countless individuals. While the prudent endeavor to reduce high-interest consumer debt before embarking on investment journeys holds merit, not all forms of indebtedness are of identical ilk. The narrative changes with low-interest debt, exemplified by mortgages or student loans, which can harmoniously coexist alongside investments. This harmonization is particularly pronounced when the envisaged returns from investments outpace the interest rates linked to the debt. Singularly focusing on debt liquidation risks forfeiting the potential to harness the almighty force of compound growth through investments. A judicious approach necessitates a comprehensive evaluation of the nature of the debt, its accompanying interest rates, and the conceivable returns on investments. This intricate equilibrium ensures that the potential for financial prosperity is not compromised by a binary approach to debt and investment, but rather optimally balanced. Number 7. Time-intensive investment gains. The misguided belief that investment fruits require an interminable wait to materialize couldn't be farther from reality. Although the prospect of waiting decades for substantial returns may seem disheartening, it's imperative to dismantle this fallacy and embrace the formidable force of compounding. Even across truncated timeframes, the enchantment of compounding, where earnings beget more earnings, can spring to life and exert a palpable influence on your investments. Granted, time amplifies gains, yet this doesn't negate the exhilaration of witnessing your investments burgeon over a relatively brief interval. Consider it akin to planting a seed. While a tree's maturation demands time, the journey is punctuated by sprouts and incremental growth. As your savings accumulate, Dividends flow in, and your contributions align with prior investment gains. An empowering sense of progress ensues. The newfound financial flexibility becomes tangible, reshaping your monetary landscape. Investing demands a touch of patience and a grasp of the compounding effect, which in turn culminates in pleasantly surprising outcomes that may arrive sooner than anticipated. Resist the clutches of the myth that investment benefits remain reserved exclusively for a distant future, as you pave your path towards financial empowerment. Myths resemble villains in a fairy tale, evoking fear until the curtain is drawn back to reveal mere illusions. Investing doesn't inhabit the realm of an exclusive secret society or a clandestine game of chance. It's an odyssey of progress, enlightenment, and perhaps a sprinkle of challenges. Thus, when confronted with a platter of investment myths, equip yourself with the veracity. Investing extends its embrace to all, transcending the boundaries of luck and privilege. If you enjoyed this video, give it a thumbs up and share with your friends so we can keep making them. For more video like this, hit the subscribe button and remember to click on the notification bell. Also, be sure to check out our order videos as well. Thanks for watching.